Absolutely, I agree.
All right, talking about York region and specifically jumping into the freehold, I think this is one that a lot of people are going to want to hear about because this is where a lot of our bulk of our homeowners are. We have a lot of detached and freehold properties, specifically here in York region, and it's nice to step away from the condos for a minute. So it's an important market segment for us to take a look at. Now, we are seeing a decrease there in our median price month over month, going from $1,335,000 previously down to $1,310,000. And this, Matt, to me comes through as talking about making the market again. When you're seeing homes up in neighborhoods and then one home sells for significantly less than what you thought it would because nothing had been selling and they decided, hey, we need to sell, we're going to sell this for less. Now everybody's got to follow suit because that's what the buyers are expecting as they dictate the prices. Yeah. So what do you think? Is that something that, again, that you're seeing around York as well?
Absolutely. And to be fair too, when you have the increase in new listings as well, sometimes they come on to the market and they're priced lower than their competition. So the competition has to sit there and say, you know what, we need to make a readjustment to be competitive with them as well. So I think that's probably what's going on with their, but the big thing that stands out for me here is, year over year down 7.7%, is quite the uptick there for me.
Yeah, and thank you for bringing our attention to that because that is the big difference. And again, when we're sitting down and we're talking about what your home might be worth today, a lot of sellers have that memory of the one that sold last year in mind because it just makes sense. It was a nice price in comparison. They feel good about that. It's the last thing they were paying attention to. But this is the reality of where we are, is we're down 7.7% year over year in terms of our freehold properties when we're looking at median price. And we're seeing that transaction volume uptick month over month. And as, again, year over year, as I bring my mouse down here, you can see this here. These are listings that are terminating. They're coming off the market because they didn't sell. Now, that could be because they tried to hold offers and didn't get what they were looking for, so they canceled and relisted at a higher price. Or it could have happened because they've been on the market for a little while and haven't sold. They're saying, okay, buyers aren't seeing value in our price at the moment. We need to make an adjustment and move that price downward. And again, you can see that even month over month, we're seeing a 2% decrease in the asking price, in the list price on those listings. And that's coming through the form of these terminations. And as well as when new listings hit the market, as we've seen, we're up 32%. They're looking at that home that's still on the market and hasn't sold. They're going to come out typically under that price if they want to make a change. If they want to be the one that sells, they can't look at the other guy that's doing the same thing and be like, we're going to get a different result. It's just not how it works. So at the end of the day, I think that downward pressure on pricing is going to continue for now. And this isn't doom and gloom, guys. There are still great opportunities. If you are somebody that is moving up in this market, do it now. Down markets are the best time to make that move up purchase. It's fantastic. The home above you is taking a bigger hit. 2% drop on 1.8 versus a 2% drop on 1.1 or 1.4, very different numbers. So you're actually gaining, you're actually making money on that purchase on the move up when we're seeing that down market, provided you can afford it and everything's going well. All right, new listing volume. We're right in the mix. Not bad. Not bad when we're looking at freeholds in York region. Right in the mix. I think to be expected. When we see active listings here, now we're starting to see a little bit more of that trend upwards in terms of outpacing the other years for active listings. I thank you here for highlighting the only times we've been higher, 2018 and 2019, coming off of the big change with the Fair Housing Plan that we saw in 2017.
And the interest rate increases from 2017 had a little bit of an impact on that as well.
Absolutely. Yeah, absolutely. And so, like we said, these were slower years in general. 2018, 2019, we were in recovery time then, right? And it's funny because of all things to kickstart the housing market, it was the pandemic. In a different timeline, it would have been very interesting to see where our housing market was now if 2020 had never happened. And it was just magically 2025. There was no COVID. There was no pandemic. Be very interesting to see where our housing market was because, like I said, those were the recovery times. And again, the only times that we've had more active listings in our freehold market than we do now. Sales volume, Matt. This is the rough one in every housing segment when we come to it. What's the sales volume? How do we stack up to previous years? We're down 38% from 2024. And Matt, how's that look for us going back to 2011?
Well, when I made this chart, I was looking, I highlighted kind of, we typically see the bulk of the sales for the year, between mid-February, March to May, a little bit into June. And, we are stagnating here through some of the biggest increases in sales we typically see during the year. And I've highlighted that, during the pandemic, we saw this massive drop off, but we saw the consumer, consumer confidence is what got destroyed here. And that's what we're seeing right now. We're seeing consumer confidence get destroyed. So it is possible that later in the year, just like we saw in 2020, we see a rebound in sales at the second half of the year.
Yeah. And it's funny because I go back to the COVID days in 2020 in April and May. It was a runaway train. It was just a runaway train in terms of how those sales upticked, and we saw prices start to do the same thing. They lagged a little bit, but they still did kind of that same effect. And I have buyers that purchased right in here in April and May. And looking back, it was just such a victory that they purchased at such a low time. Now, obviously, this chart is sales volume, but prices did the same dip as everything locked down. And it's just great to see that improvement, because it was a bold move. Like at the time to make that purchase while we were all still in lockdown, it was a big decision to take advantage of. But we saw this dip. We saw this pricing change happen, and all of a sudden, because they weren't brand new, we had been starting to look kind of in this time frame here, and then all of a sudden we saw homes that were out of our price range previously all of a sudden come down to something that was very manageable, and they're like, well, heck, we could buy that and we could be there 5-6 years. And funny enough, both of them are still in those houses today, and they bought at a fantastic time. So this is what we're talking about when we talk about the opportunity that we're seeing now in 2025.
Yeah, and you can see in the next chart the dip in price that we saw in 2020. That ultimately led to that good price decision, and it did. By the end of the year, we were significantly higher than where we started. We were significantly higher than March, right before everything shut down. But where we're sitting now is, unlike the condos, we are still above the 2021 prices. It is a little shaky there. Will it come down to that line and surpass it, or will it start to increase as the year goes on? That'll be kind of what we're going to keep our eyes on. But as far as where we were from last year, we are down 110,000 on the median sale price.
I think what's important to note is when this is happening, like, everybody's in the thick of it. You're not fully aware of where this thing's going to go. And even if you look at how 2020 ended to where the following year started, even just that jump from December to January was substantial, right? And so if we're expecting 3 more rate cuts this year, and we see some stability with what's going on with tariffs and our economy and our new prime minister, things can turn around in the GTA housing market really quickly. And that's one of the big takeaways I want everybody to have today, is just to be mindful of how quickly this can turn around. So if you see an opportunity now and you've got that chance to make the market, be the one that does it, because this can just uptick in a hurry.
Absolutely.
Months of inventory, even on our freehold. Here's where we're getting to when we talk about the condo. They were maxing out before, kind of on this type of scale. We're up there, but we're seeing like that 2019 levels in terms of freehold inventory. And it's funny, Matt, it was the freehold market that I felt had the biggest impact and was the most sluggish after 2017. And a lot of that was because the huge gains that they saw in 2015 and 2016, and everybody just pulled back and said, whoa, these things are arguably quite overpriced for what they are. And I know some neighborhoods in particular, they really felt overpriced. There was nowhere near what the value they should have been. And I think that's where you're seeing we're back into a similar time there.
Yeah, and I think during that time as well, York Region was definitely one of the areas that saw some accelerated speculation in 2017. And I think that's why, as the interest rates rose, as some of the new rule changes happened, we saw such an influx of inventory hit the market.